you've seen spreads on 10-year treasuries move close to 100 basis points in 3 days, down then back up. And if people think that the whipsawing on equities is bad, this has been pretty serious for bond guys. I mean, this is like heart attack time. Interesting also is that credit spreads are doing something unusual as well. You see munis backing out, which you wouldn't expect to see. You're seeing high yield back up, but the investment grade, the corporate side, not so volatile. And it's interesting. If you want to reduce trade deficits, the way you finance trade deficits is when people are selling more stuff to us. We don't buy things.
Capital
anymore.
account.
Yeah.
You're talking about capital account. We don't talk about that in this discussion.
Yeah. They have to buy treasuries when they sell more stuff to us because we're paying them in dollars. We're not paying in pesos. So, one of the consequences of getting these trade deficits down might be that you see weaker auctions going forward. I'm not super optimistic of where the rate curve's going. I think that the more intermediate term rates are going to probably be higher than they are now.
David, jump in. Do you have a question for Arthur?
Yeah, Arthur, what I would like to ask here is all of this really started because of Trump's belief going all the way back. It's not really about what happened last week, last month, or even the election. He's really been looking at tariffs really since the 80s. And if you can take that all the way back really to Bretton Woods, 1944. And we've had a tariff system ever since then. Back then, the world order was that the United States was so strong, it was good to let other countries, tariff us a little bit more, help these war-torn economies. 80 years later, we're running debt and deficits pretty large. So it begs the question, is Trump right on this? Should something be done about the current system as it exists for the last, several decades?
Yeah. I guess like everything, it depends. I guess he's right in the sense that I think it's almost like a Doge issue, which is kind of interesting. Tariffs are really complicated. I mean, Larry Kudlow was talking about it. I was watching him. He said, I think Canada, the book that just has the list of tariffs, and it goes down to like frozen chicken parts versus the whole chicken under 6 pounds. I mean, it's crazy stuff. It's 1,400 pages just for Canada. And so if you want to simplify the system, the best way to do it is to try to basically get what effectively comes to a flat tax, because tariffs are taxes. If he can get the rate down to 10% or very close to 10% and it's reciprocal, think about the savings.
Could the world walk away? Could we walk away from the entire system? Do we really need tariffs other than to protect maybe some real key national security concerns?
Well, I'm a supply center, so I'd say no. I live in a state with no income tax, so trust me, I don't like tax.
Rub it in. We're in New York and Connecticut over here, so thanks.
That's right. I'm in Nashville, Tennessee, so but I'm a native Californian originally. I'm a tax refugee. But yeah, I think what the goal be is, I think you're going to have some tariffs. You can't get rid of all of them, but at the same time, if you can lower the complexity and lower the absolute rate, you cause the fewest number of distortions in behavior. So you don't get this gaming of like, hey, we're going to ship steel to Canada and Mexico, then import it in, it came from China or Russia or wherever. Those games kind of stop, which is really what you want. You want markets to and industries to just figure out who can do things the best.
Arthur, I'm going to give the president credit. I will entertain the possibility that this chaotic strategy is actually the strategy. But I want to ask you, and I want to get back to capital accounts. I think that a lot of people like me who are not professional CFAs or even have finance degrees, we tend to think of tariffs on the one side, the trade imbalance and the trade balance numbers. But what I threw out at you earlier, capital account, what we forget is, yes, we may have a trade imbalance, but I think the analogy I heard was, I've got a trade imbalance with my barber. I don't get anything except a haircut. That individual gets the money. Capital accounts, on the other hand, is the flow of money into the United States. Yeah. And if we were to go to, I'll just say for the discussion, no tariffs, I mean, truly open trade, would that necessarily be a net positive for the United States, or would it be a problem? Because it's a lot cheaper to make sneakers in Vietnam than it is in the United States.
So I guess like everything, it depends. So,
You sound like you're from Goldman Sachs.
And I'm not, yeah, I don't know that I'd change my answer tomorrow, but I would say, look, at tariffs are taxes. Taxes, in my view, distort behavior. Taxes are bad. They're necessary, but they're bad. So if you're going to impose a tax or a tariff, again, you want to have lowest level and on the broadest base. So you distort behavior the least, right? You cause the least amount of damage. But it's funny, you know, a trade deficit and a trade surplus, this is accounting. It's double entry accounting. So if we're running a trade deficit with someone, then the other question I would ask someone is, what's on the other side of that equation? Well, it's a capital surplus. And let me ask you a question. Would you rather have capital lined up on your border trying to get in or out?
Great question. I know how I'd answer it. I want it in.
When we have good policies in the United States, capital wants to get in. It wants to buy U.S. located assets. How does it do that? Run a trade deficit. We run a trade deficit with the world. They run a trade surplus. They try to import. Sorry,
I think that's been great for assets here in the United States and the asset owner class in the United States. But I think what President Trump's trying to do is speak to that segment of the population that got left behind with all that. And that clearly exists. And there was also some national security concerns that we kind of witnessed during COVID, where we suddenly found out that we weren't manufacturing anything.
Yeah.
And that some key things that we needed just to survive as a nation, we were reliant on, you know, an avowed, what other word can I use but an enemy?
This is going to go to both of you. I'll start with David, though, because all of us are, I'm older than you, Arthur. I'm probably about the same age as David, although he was in the rock band. You might be a year or two older than me. David really was in a rock band. That's another story. But here's the deal. We grew up in an era of globalization, free market capitalism being exported to the world. And as David just pointed out, we sacrificed a great deal. David, you first. The strategy at hand is blow it all up now and fix it. But is that realistic? Because, yeah, a lot of millions of Americans got hurt as we globalized. But do two wrongs make a right? Do we hurt millions of Americans to fix that in the process?
Yeah, we do. And that's the unfortunate thing, because, you know, if what President Trump is trying to do is the art of the deal, and this is a grand negotiating scheme to get people to come to the table, because tariffs, they're an economic weapon, and they're gamed. And we saw China come into Mexico and game the entire, you know, system. If that's what it is, then I kind of endorse that. But if the goal is to end up with some kind of revenue generating large tax, ultimately that's self-defeating, because you start to protect an industry and it becomes very inefficient, and there's no competition, and mankind does not advance. So there's a balance here somewhere, and it's above my pay grade, but somewhere out here is the right balance, and I hope we can get to that.
Arthur?
Yeah, you're right. So go back to the late 70s, early 80s under the real President Reagan. You had protectionist policies protecting U.S. steel, autos. Remember Lee Iacocca, Buy American?
Mm-hmm.
They make crummy products. Why? Even the airline industry in the U.S., hugely regulated, and to David's point, you know, became really inefficient, overly protected, didn't innovate, didn't reinvest. Why? Didn't have to, right? So high tariffs are definitely a game that destroy companies, they destroy sectors, they destroy industries. So that's a non-starter, other than for national security purposes. 100%. That'd be one of the few things. You go back to David Ricardo, gains from trade. That's important stuff. But national security trumps everything. But you want to have the lowest tariffs possible. Like, again, it's just like, it's any tax. It's like an income tax. It's any kind of tax. So if you're going to impose them, keep them low.
Well, I'm going to, as we wrap this part of the discussion up, let me ask you about this, because I lived in Cleveland, Ohio for several years. It's one of my favorite cities in the country. I was there when LTV went belly up. I was there when it was middle steel at one point. A buddy of mine lost his retirement when LTV went up. I can't imagine them expanding that steel mill after they shipped, by the way, the facilities to China. This was the stuff I covered as a reporter 20 years ago. But even with tariffs in place, and the United Steelworkers are supporting all of this, I don't see that stuff coming back. Do you, Arthur?
I mean, if we subsidize it, it will. I mean, so the president really wants shipbuilding. I mean, the government demands shipbuilding. We're going to get shipbuilding. If the government demands steel manufacturing in the United States, they can subsidize it. I mean, you can bring it back, no problem. And you can bring it up pretty fast, probably. But, speaking of Cleveland, my dad's from Cleveland. My grandfather ran Clevite, which got by gold. And, he didn't retire with a lot of money. And he was a CEO of the company. He went from the stockroom to the CEO. So, yeah, industries that get protected and that don't innovate or can't reinvest and really become better companies, from a corporate standpoint, they don't tend to do well.
David,
and we can protect them, but
I'll take on to that. But the divining rod might actually be AI and robotics. It might be the way for us to compete in the real world at the manufacturing level. We don't know yet. But that's the hope of what AI can bring us as it translates to the entire industrial complex.
So this is the last question for both of you. I'll start with David. We'll finish with Arthur. David, Thursday morning, I'm sure your clients are calling, and I'm sure your strategy was not sell and panic and then lose when the thing the rise back up.
I came close.
Okay. Well, honesty, you can testify. What are you going to do tomorrow? How do you plan when it's as if this is really chaotic? There's no foundation.
It is, and we have not fixed the market. Even coming into this, there were cracks in the market before all of the tariff stuff. DeepSeek moment was very, very serious. It showed that we were overinvesting. We were already rich, and with interest rates where they were, Warren Buffett isn't stepping in here. Where Warren Buffett would step in is probably about 15%, 20% lower than where we are right now.
Arthur?
Wow. That's great, David. Thank you. I'd say some version of the same thing. Professional money managers, it's, keep calm and carry on, focus on fundamentals, stick to your process. If you see a company you really like, has good management, good earnings, they're going the right direction, they're in a sector that's the right place, like AI. You stay the course, prices come down. If you have cash, redeploy it, dollar cost average in. Don't look at your statement every day. I tell all my friends that I'm like, don't look unless you're going to do something.
I'm going to throw everyone for a loop because there's a question that came in from Courtney, who's on X, that I do want to get this one in. And it's Courtney who's asking a question that I think a lot of us who are novices want to know. And Courtney writes, I'm 30 and trying to grow my Roth IRA. Good for you for having the Roth. I did that years ago. With today's record closing, should I invest now or wait for another drop? David, you take that one first.
I think Arthur said it, dollar cost average in, because none of us really know where the bottom is. It's a process and it'll unfold over time. It's not a price. It's really a process that has to take place. I thought Arthur said it perfectly.
And then let's pull up this question coming in from Paul. Paul writes, if you impose the tariffs with China, 125%, I think of that movie, The Producers, the Mel Brooks version from the 1960s, where they sell 2,000% of, the investment in the show, but 125% tariff on China. So America can have produce, so America can produce the same items now imported. Wouldn't it take 3+ years to make that change? And wouldn't businesses want stability before committing the dollars? Arthur, you take that one.
No, they make the change right away. They can impose the tariffs right now. In fact, he did. He imposed the tariffs 125% effective, I think, tonight. So they spent a lot of time. This is one of the, if you noticed early on, they had a hard time with the de minimis amounts, $800, it was under $800. So they're shipping stuff through the Postal Service. They fixed that loophole. So they are actually hitting them with 125% tariffs, I think, effectively tonight.